Hello students, I hope you are all okay and enjoying the videos. In this video I'm going to show you how to prepare the cash flow statement and especially the operating part of cash flow statement and using a direct method. As you know that cash flow statement has got three sections: cash from operating activities, cash from financing activities and cash from investing activities. But in this video, I'll only focus on the operating activities using the direct method. So the question is in front of you, which is Athenia PLC, which completed the second year of trading on 31st of December 2018, and the following data is available. Remember that when you have a question in front of you, always read the requirement first so that you know what is required in the question. So I'm going to read the requirement, which says, using the information above, calculate the net cash flow operating activities using the direct method. So now I know that I am asked to prepare the operating activities part of the cash flow using the direct method. In order to provide myself some guideline, I will draw the format first. So the format will be cash flow from operating activities cash receipt from the customer, next is cash paid to suppliers, next is cash paid to employees, and this is a positive figure, this will be negative figure, this will be a negative figure. Cash generated from operations, next is interest paid, which will be a negative figure. Interest received, which will be a positive figure. And then income tax paid, which will be again be a negative figure. And then lastly, net cash flow from operating activities. So now I have the format in front of me, and it will be easy to guide myself that I need to find the cash receipt from customers and cash payment to suppliers and cash payment to employees. So now I'll read through the question and pick the information which is relevant to find, first of all, cash receipt from customers, or it can be cash paid to suppliers. I can find either of these figures first, depending on the information I have available. So reading the first line, it says cost of sales is 140. Inventory brought forward, which is an opening inventory, is 4,000 and closing inventory is 6,000. So I know the equation is from the income statement that opening inventory plus purchases less closing inventory is equals to cost of sales. So I'm going to call it working number one. Opening inventory plus purchases less the closing inventory gives me cost of sales. I know the closing inventory is 6,000 given in the question. I do not know the value of P, and I know the value of O. Opening inventory is 8,000. And the cost of sales is given in the question, which is 140,000. After rearranging, I can find out the value of P, which is 142,000. Now I have worked out my purchases. I need this information for my payables account, suppliers account. Working number 2. I will open a T account, which I always encourage my students to open a T account, because then you will not do a mistake of recording the figures on either debit side or the credit side. Payable. Now I can record this £142,000 which I have calculated for purchases. So you need to remember your double entries. When you purchase on credit, the double entry is purchases debit and payables are credit. So payables account will be credited by 142,000, and I'm going to write purchases here. Now I need to find the opening balance of purchases, payables account, and closing balances of payables account. So let's read the information again. It tells me that trade payables at the beginning was 8,000 and 6,000 at the end. So payables, as you know, it's a liability account. So the opening balance will always appear on the credit side. And the closing balance will appear on the debit side, which will become the opening balance for the next period on the credit side. So now adding this, 142 plus 8 gives me 150. Minus 6,000 is 144. So this is the amount I have paid to my suppliers, and you know that when we pay to our suppliers, the double entry is payables debit or suppliers debit and bank is credit. So payables are debit and bank is credit. So now I have found out that I have paid 144,000 to my suppliers, which I'm going to record in my format. $144,000. Next is working number 3, where I will be looking for how much I have received from my receivables. Receivables are your customers. Now reading the information over here, it's in the second last bullet point, sales revenue of 300. Sales revenue is 300. So I will pause here and first of all I'll record this £300,000 sale in my receivables account, assuming that I have been selling on credit. And when we are selling on credit, the double entry is receivables debit, sales is credit. So in my receivables account I will be recording 300,000 on the debit side. And then again reading the same statement, during the year the trade receivables brought forward balance was 14,000 and the closing balance at the end was 18,000. So as you know that receivables are your asset in nature. So the opening balance of 14,000 will appear on the debit side, brought down balance. And the closing balance will appear on the credit side, 18,000, which will become the opening balance on the debit side, in the next term or in the next period. So the total is 314,000. I will copy the same figure on the other side, 314,000. Take away 18,000 will give me 296,000. And that is what I have paid, and what I have received from my customers. So when we receive from our customers, the double entry is bank debit, receivables credit, and you can see that the amount is appearing on the credit side, and just behind that I'm going to write bank. So again, bank debit, receivables credit. So now I have found the second item for my format, and I have received 296,000 pounds from my customers. Now salaries paid during the year was 88,000, so this is the amount which we have paid to our suppliers. So this is real cash outflow, 88,000. I do not need to open a T account, I'll record it straight away because it's been given. Now I can add the cash I have received from my customers, 296,000, take away 144,000 to my suppliers, take away 88,000 to my employees. So the cash generated from operations is 64,000 pounds. Next, I have to find out how much interest I have paid and how much interest I have received. So the interest which I have paid is 2,000 pounds. So I'm going to record 2,000 pounds as cash outflow. So that's why it is in negative. And the interest income received is 1,000 pounds, which I'm going to record as a positive figure. And then lastly, the income tax. So the information tells me that income tax for 2018, which is the current year, is estimated to be 12,800 pounds. And the income tax of 10,000 from 2017, which was last year, were paid during 2018. And remember, this is a cash flow statement. We have to record the payment of tax which we have made in this current year, not the estimate. Estimate hasn't been paid yet, but £10,000 for the last year has been paid in the current year. So I'm going to record it as £10,000 as a negative figure. And lastly, I'll calculate the net cash flow from operating activities, which is 64,000, take away 2,000, plus 1,000, take away 10,000 is 53,000. So this is the operating activities, cash from the operating activities in the cash flow statement, and which is the top part of the cash flow statement using the direct method. I hope you will find it useful, and I'll be making some more videos where I will have one question in which I will calculate the cash from operating activities from direct method, using the direct method and indirect method, and I will show you that the result is the same. It's just that the presentation is different. Thank you very much, and don't forget to like and subscribe. Thank you. Bye.